Good evening. This is Dale Wetzel. I'm the host of the Legislature Today radio show. We're broadcasting live from the Peacock Alley American Bar and Grill in Bismarck. It is absolutely frigid outside. It's below zero, but we have a nice crowd here, and the bar's hopping, and it looks as if folks are enjoying themselves. We have this evening a sponsored hour from the Credit Union Association of the Dakotas. We'll be speaking to a national official who represents credit unions. We'll also be speaking to Attorney General Wayne Stenehjem about credit union and financial issues. First of all, let's give you a brief rundown of what happened in the legislature today. In the Senate approved a couple of constitutional amendments. One of them would give the legislature veto power over a voter-approved initiative if the initiative had an impact on the state budget of more than $50 million over 2 years. Again, the Senate approved that constitutional amendment. It will now go to the House, and if the House approves it, it will go on the statewide ballot next year. And North Dakota voters will get to decide essentially whether they want some of their power to initiate measures taken away from them, because this particular amendment would give the legislature power to veto a voter initiative if it had an impact on the state budget of more than $50 million over 2 years. The Second Amendment would limit the size of a fund that is essentially a financial backstop for state schools. It exists in order to chip in money in case state school aid comes up short of projections and tax collections fall short. Now, that hasn't happened since 2003. This fund, which is called the Foundation Aid Stabilization Fund, it's existed since 1994. That is when it was established by constitutional amendment by the voters. It subsists on a portion of state oil tax collections, and just like everything else that gets oil taxes in North Dakota, it's been growing like topsy. Right now it has a balance of about $300 million. It's expected to grow to $600 million over 2 years, and the proposed amendment would cap the level of that fund at approximately $180 million. Now, that amount would be able to grow in the future according to the amendment's terms, and the rest of the money would go into another constitutional trust fund, or it would go to benefit education. In the House approved a couple of measures that deal with the new anti-smoking initiative that voters approved last November. One of the measures that was approved essentially relaxes a requirement that signs be posted on buildings and in vehicles that say that you can't smoke in them. The initiated measure that voters approved last November bans smoking in the workplace, and one of the things that is counted as a workplace is a company car or a car that's used for work. The legislation that the House approved today, and now it does go to the Senate for further review, but the legislation that the House did approve says that you don't have to post no smoking signs in vehicles, and it also says that you only have to post no smoking signs on buildings next to certain entrances. You have to post it next to an entrance if the entrance opens from the right or the left, but you don't have to post a no smoking sign by, say, a garage door or a loading dock door. The House also approved a bit of legislation that says a judge can take away your hunting, fishing, and trapping privileges if you're convicted of a crime as an alternative to sentencing you to jail. This evening, we have some guests who are going to talk about credit unions and financial issues. A gentleman that we have on the phone who is our lead guest, his name is Bill Cheney. He is the president and Chief Executive Officer of the Credit Union National Association in Washington, D.C. Mr. Cheney, welcome.
Thank you very much, Dale. It's great to be with you. Thanks for having me.
Mr. Cheney, could you please tell us what is the Credit Union National Association? What does it do?
Well, Dale, we are a national association based in Washington, D.C., although we have a significant part of our operation in Madison, Wisconsin as well. It represents credit unions at the national level, also provides education and training services and business services to credit unions. We do work very closely with state associations across the country, including the Credit Union Association of the Dakotas, who's with you this evening. So our job is to represent credit unions at the national level, and our state associations, of course, do the same thing in state capitals across the country. You
mentioned you have operations in Madison, Wisconsin. Why there?
You know, CUDA was started about, close to 80 years ago now in Madison, Wisconsin, and was headquartered there for many years. About 15 years ago, it became clear that so many of our challenges were at the national level, and so much emphasis is put on advocacy in Washington that we needed to have a larger presence in Washington, D.C., and so that's why we moved some of our key offices to Washington. But we've got about 60 people in Washington. We've got about 150 people in Madison that work to represent credit unions. So it's still a big part of our operation up there.
Aside from advocacy services, sir, what else do the Credit Union National Association do for members?
A lot of it is focused on advocacy, but we also do training, education, certification programs, professional development, ongoing professional education for practitioners, if you will, at credit unions. There are about 7,000 credit unions nationally that have collectively just over $1 trillion in assets and serve 96 million members. So we've got a large membership base, and they have a lot of needs for training services as well as business services. We partner with a number of different companies that provide services either to credit unions or through credit unions to credit union members.
Sir, what are your membership trends right now? Are you gaining members? Are you losing them? Are you staying fairly stable?
Credit unions have seen very strong growth in the last year or so, and it sort of was sparked at the end of 2011 by something called Bank Transfer Day. And it was, I don't know if you recall back then, it was shortly after the financial crisis had ended, and a number of banks had announced some changes to their pricing, and in particular Bank of America announced a new $5 a month debit card fee. If you used your debit card, they were going to charge you $5 a month, and that was in response to some legislation that had passed in Washington that reduced interchange fees on debit cards. So long story short, there was a young woman in California who didn't want to have to pay that fee, and rather than just moving her own account, she started something called Bank Transfer Day. It was November 5th of 2011, and that sort of shined a light on credit unions, the fact that credit unions don't charge those types of fees. Credit unions are not-for-profit cooperatives. We're owned by our members, so we're operated for the benefit of our members. And that got a lot of media interest in credit unions, as well as a lot of consumer and small business interests in credit unions. And since then, we've seen the strongest growth in credit unions over the last 15 months that we've seen in 15 years. And we've seen about 2.5 million people join credit unions over that period, and that's the strongest growth, as I said, we've seen in 15 years in terms of membership. More interestingly, I think, is we've opened about 3 million checking accounts at credit unions. A lot of people moving their transaction business because credit unions are a better deal, and they must like what they see, because not only is the growth continuing, but it's accelerating. And so I think, word of mouth, social media, that sort of thing, people are sharing their success and encouraging other people to join.
Are you going to have a bank transfer day in the future sometime, or is every day bank transfer day?
Yeah, we like to say every day is bank transfer day, but that was something we didn't create, and we certainly benefited from it, but it was just something that was created naturally by a disgruntled customer. And, we need a strong banking system in this country. There's no doubt about it, and banks in communities across the country do a great job. But we think it's important for consumers to have an option. And the credit union option is truly different. It's an option where the institution, you get to own a piece of it. Every member is on equal footing, one member, one vote, and you have a say in how that credit union operates and how it treats its members. And that's different than the banking model where they're owned by shareholders. I'm not saying there's anything wrong with the other model. It's just that our model is an important option.
So let me make sure I have this straight. If you have one customer that has $50 in the credit union and you have another one that has $1 million, and they both have the same vote,
They both have the same vote, one member, one vote. Yes, sir.
Okay. What kind of shape are credit unions in across the country right now, sir?
Well, the financial crisis was tough on credit unions. It was tough on everybody. I know the Dakotas did better than most of the rest of the country, but even in, with, gosh, I was in California and Nevada when the financial crisis started, and it was tough out there, let me tell you. And in other parts of the country where we saw unemployment up in double digits, 15, 16%, it was hard. But credit unions went into the crisis well, capitalized. Credit unions didn't engage in the kind of predatory lending practices that created the crisis in terms of teaser rate loans and balloon, these 1/4% loans, no doc, low doc loans. And so credit unions weathered the storm better than most, although certainly we were impacted. Earnings were impacted at credit unions, and it was a struggle. But since then, we've seen a quick recovery, and credit unions are back up on their feet and doing well. I'll give you one statistic that I think shows how credit unions performed during the financial crisis, and that is when many banks had to hunker down and turn their backs on their customers, not because they wanted to, but in many cases because of regulatory pressure and capital pressure. Credit unions saw an increase in business lending. I'll give you one example. During the financial crisis of 45% at the national level, bank business lending declined by 15%. Credit unions really stepped in and filled a void when it was most needed by consumers and by small businesses. And because of that now, some credit unions are starting to hit we have a member business lending cap for most credit unions, and some credit unions are hitting that cap. And so one of the things we're doing here in Washington, with the help of people from North and South Dakota, is trying to get that cap raised so that credit unions can do more to help small businesses.
What is the cap presently, and what would you like to have it raised to?
Today it's 12.25%. For 90 years, until 1998, we didn't have a cap. In 98, Congress imposed this artificial cap. We're trying to raise it, not to 100%, but to 27.5%. We think at that level it can be a reasonable portion of a credit union's loan portfolio. At 12.25%, most small credit unions can't even justify getting into the business because there's a lot you have to invest in technology and procedures and expertise to do business lending. So that would allow more credit unions to lend, and it would allow the credit unions that are lending today to do even more to help small businesses. And it's hard to argue that small businesses need more access to credit these days.
What sort of, you mentioned your job as an advocate in D.C. for credit unions. Yes. One of the things that you hear quite a bit about from the financial institutions is the effect of new regulations coming out of D.C.
Right.
and how they affect how you do business, what it costs to do business, and whether or not these regulations are needed to protect consumers. Could you talk to us about that for a moment, please?
Yeah, absolutely, and thank you for asking. Regulations have a huge impact on credit unions. Most credit unions, with a few exceptions, aren't subject to. Let me start with the Consumer Financial Protection Bureau, because that's new, and it's having a big impact, and they're having to write rules as mandated by the Dodd-Frank Financial Reform Act, and thousands and thousands and thousands of pages of new regulation. Most credit unions are small relative to the banking industry. The banks are impacted too. Every dollar that a credit union spends complying with the regulation is a dollar that they can't spend serving their members. So it's a real issue. It's a serious issue. And you asked about are regulations needed to protect consumers. At some level, yes. But Richard Cordray, who's a director of the Consumer Financial Protection Bureau, has said, and Barney Frank, who was one of the architects of the Dodd-Frank legislation, has said, nobody needs to protect consumers from credit unions. Nevertheless, you cast that blanket out there, and it's hitting everyone, and so credit unions do have to largely comply with the same regulations, and it's costly. And, one of our questions when the bill was being debated was, if credit union members don't have to be protected from their credit unions, which they own, shouldn't there be exemption authorities so that certain classes of institutions can be exempted? the legislation includes that language. They're having a difficult time implementing that in practice for credit unions and community banks, which we think should be exempted in many cases.
How difficult do these regulations make it for a credit union customer to get a home mortgage loan?
Well, you know, those regulations are just now being promulgated, and we've seen a couple of releases just in the last few weeks of new home mortgage disclosure regulations. There's new regulations on qualified mortgages that are coming out, and new regulations on the ability to repay, new regulations on how you can compensate mortgage loan officers, for example. And our focus in all of our comments and discussions with the agency, and we talk to them on a continuous basis, has been with a focus on credit union members and credit unions and the impact that it's going to have on them, and our concern about unintended consequences. It was certainly not anyone's intent to make it more difficult for a consumer to get a mortgage. But if you have 1,400 pages of new regulation over and over again, at some point that increases your costs. And even if it doesn't make it more difficult for someone to get a mortgage, it makes it more costly. And that's really not what we need right now. We need more access to credit, not less. We need easier access to credit for qualified borrowers, not less. And we do have some concerns in that regard. I will say that the agency is certainly open to listening to our concerns, and they're trying to address our concerns. But they've got this legislation that requires them to write these new rules, so they can't simply refuse to do it.
Sir, could you give me some indication of the relative strength and market penetration of credit unions in North Dakota and South Dakota versus their strength and market penetration nationally?
Well, the credit unions in North and South Dakota have done an excellent job. They serve I don't have the exact statistics right in front of me, but I know they serve a significant percentage of the population there. I
think we have a gentleman here who can help you. His name is Jeff Olson. He's the vice president for advocacy for the Credit Union Association of the Dakotas, and I should have asked him this question, but I didn't, and he's over here jumping up and down. So, Jeff, why don't you have a go at that question?
Yeah, Jeff does a great job out there. Thank you.
Thank you, Dale. Thank you, Bill, and appreciate you taking the time to call in from D.C. I will tell you, though, it's below zero here, so you did the smart thing by calling in. So
I heard the weather forecast, and we're thinking about you.
I'm looking forward to coming to Washington next week, where it's a balmy 50, so I appreciate that.
Right.
So, in North Dakota, we have less than 10% of the market share, about 220,000 members. And in South Dakota, we call that, and this is where our Senate banking chair resides, Senator Tim Johnson, we have less than 1% of the market share in South Dakota. So it really is a banking community in South Dakota.
But you serve a lot of people in both states. I mean, in terms of the assets, it's small, but in terms of the people you serve, it's still significant.
Yeah, it's just under 500,000 between the two states in members. Yeah, correct.
Sir, I understand that there's some credit union folks and volunteers from the Dakotas who are coming out to your fair city next week to advocate for credit unions, and there's some sort of conference being held. Could you talk about that for a moment?
Yes, next week is our Governmental Affairs Conference, and we're going to have nationally about 4,200 people coming to Washington from all across the country, all 50 states. We've got a good group from both South Dakota and North Dakota, and that's critical. Jeff mentioned Chairman Johnson from South Dakota, and we've always enjoyed a good working relationship with him. He's chairman of the Senate Banking Committee, which is crucial to our future. And not only that, but now your new senator from North Dakota, Heidi Heitkamp, Senator Heitkamp is also on the Senate Banking Committee as one of the new members, not only of the Senate, but of that committee. So it's very important that they hear from their constituents about how important credit unions are to both South Dakota and North Dakota.
Sir, one of the things that some of my friends in the banking business talk about, frankly, after every show that we do about credit unions is they say, ask them about how they don't pay taxes. And I guess I want to know, what about, how does one justify the tax exemption status for credit unions in the regulatory scheme of things?
Sure. Well, credit unions have been tax exempt throughout our history. That tax exemption has been reaffirmed by Congress on multiple occasions. Most recently and most significantly in 1998, when Congress passed legislation to address a Supreme Court decision having to do with field of membership. And credit unions are tax exempt because they're not-for-profit financial cooperatives that are owned by their members and operated for their benefit. We distribute any excess earnings that we have to our members in the form of lower rates on loans and higher rates on savings and lower fees. And our members pay taxes. And by the way, credit unions pay taxes. Credit unions don't pay federal income taxes, but they pay payroll taxes and property taxes and all sorts of other taxes. They just enjoy a federal income tax exemption. When we were formed, the legislation that formed credit unions said that credit unions were being formed to promote thrift and provide loans for provident purposes as an option to the for-profit banking industry. We continue to fill that role today. And, Dale, there's a lot of discussion in this town, in Washington, about comprehensive tax reform. But I think most lawmakers understand that a tax on credit unions isn't a corporate tax. It's a tax on 96 million hardworking credit union members. And I don't think most people really want to engage in a battle of taxing middle-class Americans in order to fix the problems that Washington faces today.
Sir, what's your top legislative challenge in Congress this year?
Our top legislative challenge? Yeah, well, certainly protecting and preserving the credit union tax exemption is something that's at the top of our list. We continue to be reassured by the powers that be that we're in a good position there. But beyond that, we want to get some regulatory relief, and we want some other charter enhancements, too, to help credit unions grow.
We've been speaking this evening to Mr. Bill Cheney, the President and Chief Executive Officer of the Credit Union National Association of Washington, D.C. He's the gentleman whose voice you just heard. We also have at our table Mr. Jeff Olson, a Vice President for Advocacy for the Credit Union Association of the Dakotas. This is the Legislature Today radio program, and this hour is sponsored by the Credit Union Association of the Dakotas. Coming up in our second half hour, we'll be speaking to North Dakota Attorney General Wayne Stenehjem about financial scams and other financial topics of interest. We'll also be speaking to Stephanie Finck, the Operations Manager for the First Community Credit Union in Jamestown. Good evening. This is the Legislature Today radio show. I am Dale Wetzel, your host this evening. This hour is sponsored by the Credit Union Association of the Dakotas. We talk about financial issues, financial education issues, issues of interest to credit unions and their customers. We have, for the last half hour of our show as guests, we have Mr. Jeff Olson, the Vice President for Advocacy for the Credit Union Association of the Dakotas. We have Stephanie Finck on the telephone, the Operations Manager for the First Community Credit Union, which is headquartered in Jamestown and has 11 branches around the state. And we have the Attorney General of North Dakota, Mr. Wayne Stenehjem, who's going to be telling us about certain financial scams that go around North Dakota and ways to prevent yourself from becoming a victim of these scams. Mr. Attorney General, how often do you hear complaints about financial scams in your office?
Complaints in our office every single day, where someone is calling in and they are reporting that someone is calling up on the telephone or sending emails, spam out, asking for personal identifying information. The people that are doing that get better and better as they hone their skills, they learn what works. With reference to the financial institutions, one of the things that has been reported to our office and that we've been visiting with the credit unions and other financial institutions are people who are actually calling folks on the telephone and telling them, we're about to close out your account, there's some unusual activity or something of that nature, and so we need you to tell us your account number, your password, get all kinds of information from these folks that the bank already has, and then attempt to either use a credit card or to steal money out of a person's bank account.
Yeah, we want to close out your account, so we need your account number.
Right, okay. and amazingly, we have people who fall for that. Sometimes they will call people who are elderly, and some of whom can tend to be a little more vulnerable. And we have people who fall victims to that. people, more commonly than the telephone calls, are the emails that people get, and the fraudsters will send those emails out by the thousands. Sometimes people will call and say, how did this person send me information saying that my account was about to be closed? And how did they know I had an account at this institution? I know it's a scam, but how did they know? And the answer is they send them out by the thousands. Everybody's getting them. Maybe 5% will actually have an account at that bank. They might be then concerned about it. And every once in a while, somebody will divulge the information that they're seeking, and then will stand to lose a good deal of money. And it happens.
What do you tell these folks?
The problem, the best thing that we can do is do what I'm doing right now, and what I do regularly is tell people to be forewarned. If something sounds too good to be true, it probably is too good to be true, and never divulge information to somebody who sends you an email or who calls you on the telephone, because the sad news is that what we can tell them is there's probably not much we're ever going to be able to do to help them. These fraudsters can operate from overseas, or they operate from spoofed telephone numbers, or which are difficult to track down, or if not impossible, or they operate from Canada or elsewhere, and finding them and trying to get these people their money back is a nearly impossible task. So the best thing we can do is on the front end to provide education to people not to fall for it. And that's hard here in a place like North Dakota. We like to be friendly and we like to be very trusting, but the fact of the matter is we have to learn to be a lot more cynical than we're used to being and that we're comfortable being. But the problem is these things happen, and we get reports from people who have lost money every day. Or not every day, but regularly enough that it's a cause for real concern.
What sort of things did your office, excuse me, does your office do for education besides?
I go out and speak, and the folks from the Consumer Protection Division in my office go out and give public presentations to the AARP, for example, and classrooms and all kinds of public presentations that we do. When we see a fraud that has occurred, or something that seems to be becoming very common, we'll put out a press release and hope that we can get some coverage to let people know there's a new scam out. But the problem is that there's a new one every week, and it's hard to continue to get the kind of press coverage that you want to get when it happens so often. And the reason for that is they get better and better at the scams. They find out what works. They're able to hone their pitch and just get better and better at doing it. So those are some of the things we do. Also, I invite people to go to our website, ag.nd.gov, which has a whole host of consumer information. One of them is a publication called Scams, Shams, and Flim-Flams that you can find there. And that talks about all of the common scams that we're seeing here in North Dakota, why it's a scam, why people need to be very careful when they're dealing with somebody sending them either mail or spam or calling on the telephone.
Mr. Olson, what do credit unions specifically do to try to alert their customers to these kinds of this kind of tomfoolery?
Well, it's a primary role of financial institutions to protect assets and prevent losses and safeguard consumer information. And in dealing with customers, on a daily basis, that puts us in a unique situation to do that. And I do have to commend the Attorney General's office. Valentine's Day, there was a scam that hit, and it was a bank scam. It was a phishing scam, and what was happening, people were calling up cell phone numbers, and they were saying, we are with the NCUA, the National Credit Union Association, which is our regulator in Washington, D.C., and we think there's a problem with your account. We need your account numbers to verify that this is your account. And it was working, but we have some credit unions that were alerted to this right away. And they called their own credit union, and the credit union send out fraud alerts. We share that information with our banking friends, and they also were getting calls. Their members were getting calls, and so it's a continual, ongoing training program for the financial institutions.
We have on the line Stephanie Finck. She's the operations manager for the First Community Credit Union, which is based in Jamestown and has, I believe, 11 branches around the state. Ms. Finck, what sort of things does your credit union do to try to alert its customers to financial scams and how to avoid them?
We take both a proactive and, in some cases, a reactive approach. Proactively, we try to raise member awareness through our newsletter articles or articles on our website, things like that, to try to reach out to our members. We've actually seen some great improvements with the awareness between those articles and what the Attorney General provides and what the media publishes as well. We also feel it's very important to inform our frontline staff, because they are another first line of defense against fraud, because they deal with all the members and the interactions, the phone calls they take, and they're presented with all those different scenarios right up at the counter. And we also educate them through our internal website and have a scam page and different things that are currently going around, so we can keep them up to date. In the event that fraud actually occurs, then we take, of course, the reactive approach, and we use tools to get out to our members quickly, because in a case like that, it happens so fast, and we want to be able to respond quickly. So we utilize Facebook and our website and things like that.
Ma'am, one of the things that I understand these folks do in a way to try to coax information out of your customers is they use a device called phishing, which is spelled P-H-I-S-I-N-G. Could you explain how that works, please, and what people can do to avoid that?
We actually just had this incident happen last week, and it was mass calling in the Bismarck area specifically, and they called a whole bunch of numbers, and it was an automated message stating that their debit card was suspended and that they needed the card number input to reactivate the card. And in those situations, we try to educate members to just hang up the phone and not give out any information and report it to us, so we stay on top of those types of things. Of course, in the event they have given that information, you need to act quickly and get that card turned off so nobody can access it.
Ma'am, in your experience, how good are these people getting at what they do? I'm talking about the people who are committing fraud. How plausible does some of this stuff look?
It depends on the situation and the members that they're talking to. I really truly believe some of the awareness has made a bigger impact to our members, because with this last phishing scam, we had over 50 members report it to us, and out of those 50 members, we had only a couple members that actually gave out their card information. So we've seen a reduced number of members in this case become a victim of it. So I think some of the awareness is paying off.
Good. Could you tell us a bit about your credit union, ma'am? I mentioned that you're based in Jamestown. You have 11 branches around the state. Like, how big is the credit union, and what is your primary business?
We do have branches located throughout the state. We are about $435 million in assets. We do lending, ag and commercial lending, all sorts of financial services, any types of checking accounts, of course, CDs, investments, business deposits, things like that.
What's your most common type of loan, ma'am?
We do, our primary portfolio is ag and commercial.
Okay. Can you tell me, what are your customer trends? Are you gaining more customers? Are you stable? Or are you losing customers?
Our membership base has been stable over the past several years.
I think they're growing. I just got a text. They have 14 branches, so they've grown in the last 15 minutes. So
all right, outstanding.
Well.
Yeah.
Outstanding. I wish every business in North Dakota could grow that quickly. In fact, probably some of them are.
Yeah.
Mr. Stenehjem, to what extent does your office deal? I mean, you mentioned all the calls you get about financial scams, but does your office engage in bank regulation or any?
No, we don't. We're not engaged in bank regulation. Of course, we have the Department of Financial Institutions, and they're involved in the actual regulations of the banks. But we do have a good relationship with the banks, the credit unions, and other financial institutions. When some of these scams come along, those institutions have been very good about getting information out, and very often will send out an insert that people should pay close attention to with the monthly statement that comes out that talks about some of the scams that are coming along, how to protect your personal information, how to avoid becoming a victim of this kind of financial scam.
You're a director of the Bank of North Dakota as a member of the Industrial Commission. To what extent does the Bank of North Dakota have a relationship with credit unions in North Dakota?
Well, we don't have a close relationship like we do with other banks, where we're helping in participation in local lending operations for large businesses that are coming along, and don't tend to deal with them like we do some of the banking interests here in North Dakota.
I was thinking about We've had a lot of conversations on this particular segment about new bank regulations coming from federal agencies primarily, and I was wondering, does the Bank of North Dakota have to deal with any of this?
A lot of those have to do with mortgage loans, and of course we do some kind of mortgage loans for farms and those kinds of things, and so don't have the direct kind of issues that some of the local banks have. I know that they are dealing very difficult situation with all of these new regulations that come along, and the banks, and I think they have a fair argument. The North Dakota banks are paying the price for problems that originated elsewhere with the fraudulent loans, the fraudulent foreclosures, all of those things that were happening nationally never happened here in North Dakota, and I think that's a credit to our financial institutions here in North Dakota who are doing things properly. We're always complying with the law and sound lending practices, but now these new regulations come along and they have to comply with them just as the same as banks in other states who actually caused the problem, and that's causing a real problem, especially for some of our independent banks.
Well, I think one of the things, too, with the Bank of North Dakota is it's self-insured. So the taxpayers of North Dakota are on the hook for the bank and its operations. And I think the Industrial Commission does a pretty darn good job in making sure that they're good, their fiduciary responsibility to the taxpayers is done right. So
I was just wondering if these regulations would affect the Bank of North Dakota because of its status as a state-owned bank.
Well, and I have not heard complaints from the management of the Bank of North Dakota about specific regulations under Dodd-Frank and some of those other regulations that come along. We tend, as you know, for the bank, which now has footings just about at $7 billion, which is an incredible amount of money. But when we lend that out, we tend to do that in cooperation with other local banks participating, and that's why we enjoy the support of the local banks in North Dakota.
We do have a number of credit unions that do work in tandem with the bank and doing some partnerships. Some of the larger ones, like First Community Capital Credit Union here in Bismarck and Town and Country Mont, are some that do a lot. And after the financial meltdown as well, we were a three-tier system, meaning we had a corporate credit union system. The corporate credit unions were credit unions for credit unions, okay? So a people credit union or an everyday credit union could go to the corporate credit union and get a line of credit and so forth. Well, with the financial collapse, some of those corporate credit unions consolidated, and the one that we had serving the Dakotas did liquidate. And so now there are credit unions working with the Bank of North Dakota for lines of credit using pass-through services and treasury services and investment services. So the partnership with the bank has really improved with credit unions in the Bank of North Dakota.
I can tell you one area where the credit unions really have been spectacular, and that is with the Housing Finance Agency, and have been very successful and diligent partners in working with the first home loan programs and the other programs the Housing Finance Agency comes up with. I know Capital Credit Union here in Bismarck won a statewide recognition from the Housing Finance Agency for the incredible amount of work that they're doing, and they should be rightfully proud. But other credit unions doing a good job too, helping put people in those first homes and getting affordable housing for them.
We've been talking primarily about financial scams, but I mean your Consumer Protection Division deals with all manner of chicanery, if I may say. And could you discuss that for a moment?
Sure. Let me just the advice that I get to people when I give a talk on the latest scams are as follows. If you will not get an email telling you that you won a sweepstakes or a foreign lottery, You will not get an email telling you have qualified for federal grant or stimulus funds, or that you are expected to receive a tax refund and get an email from the IRS telling you that you have not claimed that refund. They don't send out emails to that effect. You will not get an email, unfortunately, saying you inherited something from a long-lost relative. You have not been selected to be a mystery shopper for any business. You have not been personally chosen to assist a foreign national, especially somebody from Nigeria, transferring funds out of the country. And no one really wants your used car badly enough that they're willing to pay you by check more than you actually asked for without seeing the vehicle.
And your grandson is not in jail somewhere.
And this is one that comes and goes. We're seeing another surge of it coming on just now, so I'm glad you asked that. That's the grandparent scam, where somebody will get a telephone call saying, Grandma, I'm at the Canadian border, I've been arrested for a drug offense, or I've had an accident, or I'm in the hospital and I need to get out, and I need money wired to me to help pay whatever the fee might be. And by the way, please don't tell Mom and Dad, because you know we're common enemies, and so would you keep that a secret? Or I want to tell Mom and Dad myself when I get home. Please help me out. We have had people who have lost thousands of dollars to that. I personally got onto a telephone call with a lady and her husband who were right in the midst of this and didn't want to believe when I said this is a scam. They wanted to help their grandkid, and a lot of people think, well, how could it be that you wouldn't recognize the voice of your own grandchild? Well, they will be crying, or they will say they have a cold, or the crying is
or they've acquired a really strange accent. Right. That's the last time you saw them.
And then these people get good enough at it so that they will coerce information out. One would call and say, the grandma would say, well, who is this? And then the fraudster would say, well, Grandma, don't you recognize me? And then she said, Sam, is that you? And yes, Grandma, it's me, Sam. And now Grandma thinks that Sam gave the name, but really what happened was she gave that information and lost a lot of money. And those kinds of things are happening all the time. Always make sure that you verify that information, or call my office, call the Consumer Protection Division of our office, and we will talk to you about some of these scams before you send anything. Once you send money by Western Union or MoneyGram, it's gone. It's the same as cash, and it can be picked up at any office around the world, and it's gone.
To what extent, how frequent is this sort of the grandparent scam?
Very frequent. We get, and it comes in waves, and then we'll put out a news release, and then the word will get out, and then it'll kind of stop, and they'll probably go elsewhere, and then after a while it comes back. We're seeing a little bit of a wave of that increasing now around the state, and the problem with it is it can work. The other one that is very common for elderly people in particular to fall for is the foreign sweepstakes, saying you have won millions of dollars, but you need to pay a fee. You have to pay a tax. You have to pay something. Wire me some money to pay that fee, and once you do, we'll get that money on its way. And we've had people who have lost thousands and thousands of dollars being strung along that way.
When you became Attorney General, did you expect that this would be as big a part of your portfolio as it is?
No, I didn't, because it wasn't as big a part of the portfolio in the Consumer Protection Division. We were chasing around the local con artists, things that would come by mail, things that were relatively easy to track down, to chase, to find the perpetrators and maybe bring them to justice. Now what we're finding is that is happening by email, by telephone that are spoofed. That is, that you can rent a bucket of minutes from a company who leased a bucket of internet cell phone minutes from another company, and it's like peeling an onion to actually find out and get to the very bottom of who it is that actually originated the call. And so it's becoming increasingly difficult to do what we really like to do, which is to catch these guys and prosecute them. But finding them, and especially with the staff as small as we have 10 people in the Consumer Protection Division, so it's relatively small. Though we do work with our counterparts across the country and with the Federal Trade Commission and others to try to work together to get at some of these larger operations that are perpetrating these scams.
How's your legislative session going?
It's going good. It's going good. We've got a number of pieces of legislation we've been promoting. The DUI bill is one that is specifically perhaps the most important piece of actual legislation, and I think that we will find that the legislature is going to get tougher on the driving under the influence, as it should. Our budget is a big issue. Probably the key thing that we're going to be working on and make sure happens is that we partner with our local law enforcement to get some more BCI agents, Bureau of Criminal Investigation, which is part of my office, out in the western part of the state to work in partnership with the increasing number of sheriffs and police department personnel that are being placed there. And so that'll be a key thing as we work through from a budgetary standpoint.
The Senate passed a DUI bill today, and the House is still working on theirs. The Senate bill was started out as an ignition interlock bill, as a scarlet letter driver's license bill. Now it's quite a bit different. What did you think of it?
The Senate bill now, as it's been amended, is more closely resembles the House bill, which is the one that Representative Koppelman and the governor and I had been promoting. So a lot of the features on the 24/7 sobriety program have been amended into the Senate bill, and I think those features are probably what are going to wind up happening at the end of the session. We'll have tougher penalties, higher fines, and then for those people who are repeat offenders who have an obvious drinking problem and need to address that, we can keep them from actually drinking and give them a license in the meantime, then, as long as they're staying sober, by going in and being tested twice a day to make sure they're in compliance, or wearing one of those ankle bracelets that will continually monitor your alcohol consumption and deal with the problem that way.
The voice you're hearing is Attorney General Wayne Stenehjem, the Attorney General of North Dakota. We've also been visiting with Jeff Olson, the Vice President for Advocacy and Awareness for the Credit Union Association of the Dakotas. Earlier in our program, we had Bill Cheney, the President and Chief Executive Officer of the Credit Union National Association in Washington, D.C. We also had on the phone Stephanie Finck, the Operations Manager for the First Community Credit Union of Jamestown. Thank you, everyone.